Cool. So I just linked in the chat the Google Sheet that I'll be sharing with you guys. I don't know who it was, but one of our users requested the strategy from Doyle Exchange. He's a YouTuber that's been trading for, I think, a number of years, and he's got a pretty unique supply and demand model that I'm going to be sharing with you guys today. That he actually predominantly trades during the New York session. I think his main pairs are GBPJPY, Euro, ETH, and the NASDAQ. I think he does trade some other indices every now and then, and maybe some other Forex, but those are kind of his core ones. But we had a FX Replay user request specifically to do GBPJPY during London, so that's what we're going to backtest today. And so yeah, this strategy essentially has kind of a core component of order blocks. I've shared with you kind of the premise of order blocks in previous chats, but essentially in a uptrend, it's the last kind of green candle before a reversal, and it can either be kind of at your high points, the supply levels, or it can be kind of on the way down, kind of a green candle in amongst a bunch of red candles. And these order blocks can act as like supply levels that will be kind of resistances to force price back to the downside, or vice versa. They can act as demand. So if price is moving kind of to the upside, you've got kind of the last red candle before the move up. And specifically for his model, I'll try and zoom in here so you guys can see this a little bit better. But he draws it like it's not just the red candle. It's essentially the last kind of order block candle, and then he extends it to the low. So even though the low is like the next candle after, he would kind of call this entire zone the demand zone in this case. And as you're coming up, he would use like this single kind of candle with the wicks on both sides is how he would draw out demand. But the key is basically it's an order block followed by an impulsive move kind of away from the price structure. So all of these that I've marked out, for example, it's, you know, not any of these kind of previous ones. It's really the ones before you saw an impulsive move to the downside for supply and then to the upside for demand. So those are kind of the keys that he uses for his strategy. I guess a couple other things I can go over. He predominantly uses the 5-minute time frame, and I think he does incorporate. Sorry, I'm just going to pull up the chat so I can see if you guys have questions while I'm going over this. Cool. He does use sometimes the 15-minute time frame for these levels, but more often I see him use the 5-minute time frame for entries, and then maybe 1 hour time frame to like make sure he's identifying the trend and things like that. But his kind of with his model specifically, he had a video where he went over like factors for high probability setups. And essentially the three things that he shared in that video was you want to see like clear breaks of structure. He says this strategy works best in trending markets, not when it's just kind of ranging back and forth. So if it had just kind of wicked this high and then came back down, he said that's like not as high probability if you have like clear trending markets with breaks in structure, because then these supply and demand zones will be more respected. And then he also likes to use the 200 EMA on the 5-minute time frame, and he wants it to be kind of in line with the trade, so kind of trading in line with the trend essentially. Whether that's longs, you want it to be kind of down here, or shorting, you want to have the EMA kind of up here. And then the third thing that he says is if you have closures into the supply and demand levels, that makes them lower probability. So he says ideally you want to stick to just if there's like wicks into the demand. And for today specifically, if we get the first candle that goes into it, if that like closes into it, then that's going to be kind of our factor that we won't take the trades. And I will kind of put a disclaimer, like I've probably watched over a dozen of this guy's YouTube videos, but I didn't join his private mentorship. Like this is all stuff that I figured out from totally publicly available information. So we're going to do our best to show you guys the strategy, but if you want to learn more, obviously going to the source is going to be best for any like nuances and things like that. Specifically for his entry models, he will essentially, it's actually kind of interesting. I don't see many entry models like this, but basically we have a supply level here and price kind of wicks into it. What he'll do for his entry is actually use a stop buy limit. So essentially after you get the first candle that kind of wicks into demand in this case, he'll do a stop buy order. Like as soon as price gets above that high, so the wick high of that candle, he'll use the low for the stop loss, and then he usually kind of targets out about 3R roughly for most trades. It is kind of variable from the videos I saw from him, but he'll either look for like fair value gaps that need to be filled, or say you're in an uptrend, he'll look for kind of a new high kind of for continuation. Or if you're in a situation where there's kind of supply and demand levels on the chart, maybe he'll use kind of those levels for his take profits. But he did typically go break even after the trade was like 1R in his favor. So we'll do the same thing today. That's something you can definitely backtest to see if that's actually worth doing or not. But in most of the videos, he went 1R after the trade went in his favor. And we're not going to do any trims or anything. I'm just going to go break even after it gets 1R, and then it's either going to be a break even or a win for that case. Some other rules that he had mentioned, let's make this go to the next page. So on trending days, he did mention that the first kind of supply and demand zone might fail, but the next one could hold. So that to me means he might take kind of 2 attempts to catch a trade per day, but generally he's really only taking kind of 1 trade. If you get a win, you're kind of done for the day. And he does trade indices, and I think he said specifically on indices, like it's really common to see this play out. He will only use untapped supply and demand zone. So if a level's already kind of been tapped into before it comes to it in the time he's trading, he won't really use that zone. And then if it invalidates it, then he'll just delete that zone. Like it doesn't really matter. He also, since he trades in New York, he'd mentioned that, for him, if London session was expansive, then New York often consolidates, so maybe he wouldn't trade those days. I'm not really going to use this because for us it would be if Asia session was expansive, maybe London is, but that's, again, something you could potentially optimize and see, which sessions you trade based on the previous session price action. And then the last thing he said is you can consider scaling down if your 5-minute time frames against the high time frame trend. I'm not going to do that today to overcomplicate things, but again, just kind of another consideration. In terms of optimization considerations that I see you could potentially do with this are, what is the kind of minimum risk to reward that you want for the strategy? Is it 2R, 3R? Do you want to use a trailing stop loss versus like a fixed level? And is it good to do like partial trims at any point? So these are all things that you can kind of play around. I did the optimization video last week that's in the recordings channel. Definitely check that out because I think it's going to help a lot of you guys' strategies. But let me know in the chat if you guys have any questions about the strategy itself. Otherwise, we'll go ahead and start diving into the backtesting. So I have, just to kind of get some reps, started out with a few kind of mapped out trades that I've just identified when I was just starting this out. So we'll run through kind of 3 examples, and then I'm going to be doing it in kind of, I guess, in real time without really seeing what the price action is doing at all. And for this, maybe this isn't exactly how I think kind of on his chart, he generally has kind of like 5-minute time frames for each of the pairs he's looking at, but I'm going to have the 1 hour and the 5-minute on at the same time, so I can kind of see what is the high time frame trend, and then also kind of use my 5-minute time frame for the levels. So we're going to go to kind of London Open, which is, I have my time set to London time zone, and London basically goes from 8 to 4:30 London time, so it's kind of what I have here. The indicators that I have are just the session indicator to show kind of when the London timeframes are, and then I have this moving average that I set to 200 for the EMA, and because that's kind of what he uses as well. And yeah, as we go, like I said, I'm going to start kind of mapping out these supply levels because we are above the moving average. The high time frame trend is to the upside, so we definitely want to look for longs on this specific day. And so I have one supply level here, this kind of last red candle, including the low. This is a level, and then as you'll see here shortly, we had kind of a last red candle here before an impulsive move to the upside, and I believe we had one more that formed early on in the session. So these were kind of the 3 supply zones that I had identified when I was just kind of starting to poke around with this for this specific day. And we are looking for longs, so we're going to see if we get any trades off of these So again, I'm just using this kind of 5-minute time frame, one candle at a time right now. You can also use a control space if you want to go kind of one candle at a time. And so we see here we have a wick into this demand level. And so we'll go ahead and count this as a valid kind of entry. It's kind of meets all the criteria that he said for high probability setups. We've got market structure shifts, impulsive move to the upside that's, broke structure here. We're definitely in an uptrend. We are in line with the 200 EMA. It's well below us. And we had a wick into the demand without closure. So for the entries, we're going to put our entry kind of at the top of this previous candle, stop at the low. And I noticed here on the 1 hour time frame, if I go a little further back, there was kind of a high time frame point of interest up here. So that's what I'm going to use for my take profits. For simplicity, I think you could maybe just do like a 3R, because that's often what he'll do. But that was kind of a kind of clear level that I saw on the chart to use for a take profit here. And so for these specifically, when you're placing the order, I'm going to do 1% of my initial balance. I'm going to use the auto break even feature after it goes 1R. So I just toggled on this auto break even and put input 1 here for risk to reward. So it should automatically put my stop to break even after we get up 1R. And then for the order type, you're actually going to use a stop order, which basically means whenever price gets up to this level, it's going to enter me in. So let's see how this one plays out. So we get tagged in pretty much immediately. And we'll see kind of as it goes up, we've gotten our stop loss now up to break even. We're up over 1R. And now we're just going to let it play out for a win or a break even. It's a really nice win to start the session. We had a tap into supply that was in line with trend, and we ended up taking our take profit at this high time frame point of interest. So that's kind of the first day that we'll go ahead and record. So I'm going to go to the next session. Yes, demand, sorry. I'm still getting used to the terminology supply and demand, so I apologize if I call them the other things. But yeah, the green is the demand and the supply is the orange for resistance. So this day we had kind of supplies and demand, but now what you can see we have flipped on the downside of the EMA. So we're ideally looking for shorts. However, this is maybe one of those situations that he said you can maybe scale down, because we are obviously kind of against the high time frame trend a little bit. But we do have kind of two demand levels down below here from kind of the last red candles before these impulsive moves or reversals, as well as this one from the previous day. We can go ahead and delete now because that happened kind of overnight. So that doesn't matter anymore. And this one, potentially got wicked into like to the tick. It's hard to tell. I wouldn't necessarily call this untapped if it got wicked into a little bit more, but we're generally looking for shorts because we want to be in line with the trend. So I'm not really interested in longs for this specific example, but let's see if we get something to play out. And again, I did mark this up a little bit, these first 3 trades, but I promise after that we're going to be just like looking at it from a kind of live standpoint. So the reason I marked out this level here is we have kind of the last green candle, including the wick high before kind of impulsive move to the downside. And I believe this demand zone, yeah, we had closures into it. So even if we were looking for longs, this probably wouldn't be a high probability long because we are kind of closing into it versus just wicking into it, which you said are the kind of the best setups for the strategy. So ideally looking for kind of one of these 2 levels for a short. And as you can already see on my chart, I've so we have a nice wick into the level here. And so generally what we'll do after we see a wick into it, you'll look for in this case, the low of that candle with the stop loss at the high. We're going to do a stop market order with a break even at 1-to-1 risk to reward, sell stop, and we'll save. And this specific example, the next candle got extremely close to tapping us in and like running up to the stop loss, but this is one of those that over time as you get more sample size, like we did get a closure into the demand or into the supply now. Sorry, I keep confusing them. We did get a closure into it. However, the first candle was still a wick. So this is for today. If the first candle that taps into it is kind of wicks, then I'm gonna count it, because that would be a valid entry for us. But maybe over time, as we get a larger sample size, we can exclude any trades that have closures. So still hasn't tagged us in yet because it hasn't breached that previous candle's low. And then we can see here we do have price get below this kind of wick candle's low, so we're tagged in now, and we're in some nice profits. I think it's already put us at break even here. And then I should have clarified the take profit level down here. There's kind of a few options you can do. Generally, he would go for 3R at least, so you could potentially, at the kind of earliest, maybe go for this, I don't know, like a continuation essentially, so breaching this high. But I noticed down here we had kind of a pretty core demand level down here, so that was the level that I had set for this one. So that's kind of why I mapped this one out this way. But again, I think that's something you can play around with the optimizations. Do you look for like the first kind of high, low point of interest, fair value gap fill that gives you 3R, and then do you trail your stop after that? Or kind of what do you, you can play around with kind of how to set it out. So let's see how this one played out now that we're break even. Okay. So great example here of why it may not be worth going break even after 1R, because this trade went up 1.8R in our favor, came back to break even, tagged us out, and then ran to our take profit. So we missed out on, potentially 4.8R. So again, it's something that we'll see over more time if that plays out. But again, kind of one and done is what I would say for this. We've gotten, we're looking for shorts on this day. So again, wouldn't really be interested in potential longs down here, just given the moving average and everything like that. So we'll kind of count that one for this day. So now we have flipped the moving average again, and we're looking to move back to the upside. The 1 hour time frame as well is kind of reacting off its 200 moving average after kind of sweeping some of these lows. And we have a nice break in price structure here with a higher high. So kind of everything aligning for looking for longs. And I've got a few supply levels mapped out here. Demand. I'm not going to get that right. You guys know what I mean. We have some demand levels here for longs, kind of the last red candle here before move up. We had one little red candle here, as well as this kind of last one here before move up. So we can look to see if any of these hold out. And again, like, you could potentially mark this one as well, but the reason that I did not for this specific example is it's probably not the best risk to reward. Like if price tags into it right at market open, if we obviously have to wait for a wick into it and then a closure back above, and so you'd have to be looking for a pretty aggressive price target to get your 3R in this case. And I don't think this one even like held essentially when it tapped into it. Yeah, so it didn't even wick into it. If this wick had gone like a little bit lower and properly tapped into it, you could have used it. But essentially, by the time I think this one was revisited, it was it closed into it, so we wouldn't have used this one anyways. So he essentially will just delete these, and when they're not like useful. Let me just make sure I didn't delete something else I was supposed to. All right. So yeah, so we have a wick into this kind of demand level below, and now we're gonna see if we can get a long here. So for these long trades, after the price wicks into it, we would do a stop market for a buy. And I think I just targeted out like a continuation of this high here, because 3R, like, yeah, that was kind of the first level that gave us 3R. So we'll kind of follow the methodology that he uses. We'll do auto break even after 1R, a buy stop. Let's see how this one plays out. So we got tagged in. Our stop losses break even now, I believe, because we got up just over 1R. So now it's either going to be break even or a win. So tagged us out break even, and then ran to TP. So Just these last two trades, you can see a great example of why, in my opinion, most models, it is not plus EV to go break even, at least like early in the trades, because that's 3.2R today and 4.8R yesterday that we missed out on because we were too afraid to accept this kind of 1R risk. So some models, maybe there is a good point where essentially, I think there's certain models that, maybe after we formed a higher high here, like, if price then broke structure back to the downside, it was most likely going to tag us out. But because we went break even here, like so quickly after 1R, then, it's still at a risk of coming back to us. But this is how he generally trades his model. So I'm going to show you guys kind of based on that. And you can refine it over time. As you backtest it more and get more data on, like, I shouldn't go break even, I should just kind of accept the risk of the trades. So we're gonna go to the next day, go to next session, and I have no idea what's going on. I haven't looked at any of these other trades, so we're gonna be looking at this real time. We're above the moving average, still in an uptrend, so I'm mainly looking for longs right now. Let's map out our supply levels, our demand levels. I keep thinking they're the opposite. So these are the kind of two levels. I guess we do have maybe one down here as well. You got a few down here actually. Let's just go ahead and mark out this one here because that's the kind of next one. But that's below the moving average at this point. So really interested in hoping one of these two will line up for us. So we've got a closure into this first one. So off the bat, not super interested. I don't think actually London has opened yet. It opens at 8, so let me go forward a couple candles. Alright, so yeah, London has opened now. We have a wick into a demand level, so this is something I'm interested in. We'll go ahead and delete this one that wasn't valid. But you can see here we had price kind of wick into this level. It is kind of a bigger body than I would like, I guess. He usually likes to see like a doji or kind of small bodied candle, but since we did get a wick into it, let's see if this one plays out kind of as we see it in real time. So we've only got 2.26R to this kind of first high, so it's not ideal. Maybe I'll go for this previous high because that at least gives us 3R. But yeah, let's see how this one plays out with a long here. We'll go auto break even again. I'm showing you guys how he actually trades his strategy himself. He's obviously been doing it a lot longer than I have, so we'll stick to that for now. But again, you can optimize over time. So buy stop if we break that high. Okay, we're still flat for now. Now we're tagged in, and let's see how this one plays out. This one maybe a loss. So we got tagged out for a loss in this one. And like I'd mentioned, this previous candle was pretty large. That's really the main thing that I didn't like about this setup. Would prefer to kind of have a smaller candle, but I guarantee the strategy is not 100% win rate, so we're definitely going to see some losses. Let's see if his other rule comes into play. He said sometimes the first level can fail, but the second one might hold. Maybe he was referring to this one here that failed. But if we get another wick into this one below, I might try and take it. Let's see what we get the rest of this session. All right, so we got a wick into it and no closes into it. So I'm gonna go ahead and try this one as well. We'll try this one for kind of the second attempt of the day. So I'm gonna use the first candle that wicked into it, and use a buy stop above that, stop at the low, and we should have a little bit of risk to reward. In this case, I'm going to use this. We have a fair value gap right here that you can kind of see from this kind of orange zone, and oftentimes he will use these fair value gap fills as his targets as well. So that would give us 3.7R. So let's go ahead and try this one out. Auto break even after 1R, buy stop. And let's see how this one plays out. So not tagged in yet, not tagged in yet. And now we have closure below, so this is just no trade. So the nice thing about his strategy is instead of entering kind of at a level and you're hoping for a reaction. He waits until you actually have some momentum in the direction you want it to go. So saved himself from a loss this day. So one loss on this day, and we kind of attempted this one, but didn't trigger in for this next day. So let's go to the next session. All right, still in an uptrend. What ended up happening that day? So yeah, it looks like it came down, swept some lows. This demand level down here that would have been pretty well below the moving average. So, you know, maybe stretching the rules a little if you would have taken this one, but we did get a reaction down here eventually. But again, you know, I want to try and stick as best as I can to his rules following the moving average and not, you know, trading it too much outside of that. So let's see, we've got demand level here and this last red candle. And then, yeah, if we go much beyond that, we're going to be flipping the moving average. So to try and stick to the high probability setups, I think that's the only one that I'm going to be interested in today based on how it looks. So let's see if we get anything. All right, we got a closure into it. So right off the bat, like I'm not really interested in using this zone. So it could hold up at one of these two, but I'm going to try and stick as best as I can to his kind of high probability setups. And so I'm going to avoid these for now. And, you know, potentially you could have gotten a short off of one of these supply levels. But again, I'm going to try to be sticking to his rules the best I can. So no trade on this day. Next session, still in an uptrend. And let's see if we have any levels we can go off here. So we have last red candle here. First supply zone. Potentially this one as well. We'll go ahead and mark it out, but I think if if it digs into this one, it's not going to be the best risk to reward. I'd rather have it drop down to this next one. But let's kind of see how London opens up and see what we have to work with. So London open is now. We have nothing into these levels yet, so we're closing into this first one, like I mentioned. So just going to delete this. As soon as it doesn't react to a level, he generally was deleted off his chart. We have a wick into this next one. That's great. That's what we want to see. And so we'll try a long here with a buy stop above the high. Let's see, 3R. Yeah, we can get 3R targeting a high, so looking for continuation to the upside. High probability setup, as you mentioned, we're in line with the moving average, in line with the high time frame trend. We've gotten a clear break of structure to the upside, so kind of everything lines up with what he said is a high probability setup. Following how he trades, we'll do 1R break even stops, and let's see how this one plays out. So we're tagged in pretty much immediately. Now our stops are break even, so we'll just see how this one plays out. All right, so this is a case where the break even worked. This trade didn't cost us anything, also didn't make us anything. And over time, this is again where you can analyze over time with the break even trades. Like, you know, we saved 1R on this case, but we also missed out on, like, you know, 8R between these kind of two trades that messed us up earlier. So that's just something you can see over time and identify, is it actually worth going break even or not? But yeah, no real trades, I guess, outside of that I would look to take. Let's see if we get any other kind of demand levels during London session that we can look into. As of right now, not really much. All right, so this is potentially one that you could, it's not really the most impulsive move to the upside. The biggest thing you want to see are these kind of big moves, big reactions off of these kind of levels, whether it's kind of at a reversal point or just like during a move. Like, these are more clear demand levels. You know, this is pretty choppy price action, so probably no more trades this day that I would see during London session. Go to next session. All right, still got our uptrend, and I'm also just off the bat seeing a nice draw on liquidity here with these two relative equal highs, so also kind of helps with potential move to the upside. We've got this last red candle here as a potential demand. We've also got this one down here. Oh, let me go to the low. So the low of this previous candle and the high of the red candle before. I think those are kind of the two key demands that I see in this case. Let's see where we're at when London opens. I got a few more candles to get there. So London opens and 2 more candles. Okay. So we will delete this zone because it was closed below, and right off the bat, I'm not going to place a trade off of this candle's high because this is not a really good risk to reward. I want to see a smaller candle than that to give us a better entry. So let's see if we can get another wick into it. Okay. So we got a second wick into it, and this candle is a little smaller, so we can get a little better risk to reward. So I'm going to use the low from this kind of first candle that wicked into it. We'll do a stop market at the high, and then what can we get with 3R here? So if we fill these fair value gaps, we got 2.92, which is almost 3R, but again, I'm going to be targeting these relative equal highs up here, because that's like often a pretty common draw on liquidity, and that'll give us a little more risk to reward. So 3.8R potential. Let's do a buy stop without a break even after 1. See how this one plays out. So we get tagged in. Our stops go to even. Let's see if this one gets a win or tags us out. Alright, so we got tagged out break even, and it saved us from a loss. So we've had two break evens that worked for us and 2 that did not. But I think still net like 6R that we missed out from it. So nothing else really to do this day. We got like that initial reaction, but these fair value gaps just kind of sent us back down. So, nothing really else that I would probably see unless we see a impulsive move to the upside here shortly that we can look for another level. But now we're below the moving average. So again, probably just going to try and stick to the one trade for this session. And if we continue down further, then maybe there's shorts tomorrow. Next session. All right. So, still in an uptrend. Still haven't taken those. We did eventually tag those relative equal highs, but it was kind of overnight during, I guess, New York session if you're in London. So, what do we have here for this day? See this red candle here for a potential demand zone. And it kind of overlaps with this one before it, so maybe I'll just use this lower one because that's a little clearer. So that's really the only one that lines up with the moving average. Anything below, again, we're going to be kind of violating the high probability setups where we want to see trades in line with the moving average. So we'll just start with that one for now and see if we get a reaction. So we did close into it barely. Yeah, so this wouldn't be a level that we'd be looking for a reaction off of. Let's see kind of how things develop a little bit. We did get a move to the upside, but I think, yeah, we did get a reaction, but not the exact like method in which he talks about it with his strategy. So it just wouldn't have been a trade that we would have wanted to take because there were closures into it as well as like an entire sweep of the level. So it was kind of invalidated. I think he would just delete these at this point. And potentially look for another level because we are still above the moving average. But I guess technically we could mark out this new demand that was created. We did technically have another red candle here before we moved down, but let's see if then we also closed into that one. So yeah, eventually got to move to the upside, but this is kind of one of the cases that I would say, like most models, you're not going to catch every single trade, and this is just one of those examples. Like if you're following kind of the proper mechanical execution of his strategy, at least for the high probability ones, then you wouldn't take this. He did, I did see him take some trades where he would actually look to kind of take a closure above kind of the lowest candle in this case. So if it did dig into it, he would still be open to entering if it reversed to the upside, but he said these are a lot lower probability, probably 50-50 if they actually like dig into the levels. So again, maybe something that you could play around with optimizations and maybe use different tags to kind of identify ones that just wick in versus ones that actually like close in and then reverse to kind of see if you actually want to take those or not. But for today at least, I'm going to stick to high probability setups and not take anything outside of that. So yeah, we might probably miss this long, but let's see if there's, now we have, so I'll show now we have another demand level created down here. So before we move on to the next day, okay, we may have actually a trade here now. So I'm going to go ahead and delete, or at least move this one back to the left. So I'm playing off this most recent demand level now that we have now wicked into. It is still London session, it's still an uptrend. The biggest, now we have not yet taken this kind of, closed significantly above these relative equal highs. So I think this is probably one at least worth attempting with his model. So we'll just go for a continuation to the highs in this case, stop at the kind of wick into the demand, stop markets buy if it goes above that previous candle, break even after 1R, and let's see how this one plays out. So we got tagged in, it almost hit our stop loss, but not quite. And now we're break even with our stops, and we got a nice win. Cool. So it does seem like you do have to, this isn't a strategy that you can just come to the market before it opens and you kind of know exactly the levels every day. Some days like this, you have to kind of see how it develops and mark out new supplies and demands kind of on the fly. But the biggest thing I think that is helpful with this is trading with the trend. So you at least know, okay, like I can see the clear trend, I can see we're with the moving average. I know I'm at least like looking for continuation to one side or another. I think that is helpful, but you do have to kind of see how these levels play out, and just kind of wait for the proper setups that he says are high probability. But yeah, we're up about 6.5R from 2 trades, including a couple break-even ones that we missed out, but got a nice win this day. Let's go to the next session. So less clear trend at this point, and my eye is drawn on this 1 hour time frame to these relative equal lows on the left, which is potentially going to drag price down to the downside. We're technically we're basically at the moving average, so it's pretty difficult to identify. Like, I would much rather if we were say there was a supply level up here and we were looking to short in line with that, that's a lot more clear. But right now there's not really anything clear. If we see a kind of break to the downside and we see a supply level now developed here, that would, in my mind, line up with the draw on liquidity, and the moving average would then be above us. So let's see if we get something like that, because I would personally probably prefer looking for shorts on this specific day. Okay, so just like I mentioned, we saw reversal to the downside. We can mark out, I'm going to use the orange one for these so we can just differentiate them a little bit. This last green candle before the move to the downside is now a supply level. Then if we come back into, we can look for shorts. So let's see if we come up to, we may not. It may just run straight to that draw on liquidity. I can see another potential supply level created. We have a green candle right here. That could also be a level we can look at. But we're almost to that kind of target for draw on liquidity, so this down move could be kind of exhausting soon, potentially. And we got closure into it, so probably not the highest probability. Could potentially be one that he would take, but just not the highest probability versus if you just see wicks into it. So yeah, pretty messy zone. He'd probably just delete this one. If we get all the way back up here, then I think we could definitely look for a short. We'll see if that happens, or if we just kind of reverse from here. Alright, slowly working our way back up to it, and maybe just barely front ran it. Alright, yeah, so we did not get quite up to this level. Let me see if this other one would have tagged. I don't think it would have quite. So this last green candle, ended up becoming another supply zone. And if this wick had gone up like a few pips more, we could have looked for a short, but technically this level, by the time like the displacement had occurred, it's I guess technically we did break structure here on the low time frame, so if you were aggressive, you could kind of consider this wick here kind of the first test into it, but I'm personally probably just for keeping things simpler. Let me see this brush. I'd rather see like for most of these, like if we got a really nice impulse than a retest. I think it's going to be a lot lower probability in this case if the retest is like immediately after. So I would have taken a short if this next candle, this 1245 candle, had wicked in, but it looks like it kind of stopped just shy. So probably no trades unless we get something super late in the session. Yeah, I think that was like the end of, this might have been New York Open, which is kind of after London session anyways. And it completely annihilated the zone. So I had the right idea today. We were looking for shorts, trying to see if any of these supply levels could kind of give us a reversal, but this one got front ran initially, and then same thing with this next one. So I would say probably just no trades on this day, but we had the right bias and just didn't see any trades with this model. So we have now flipped back above the EMA and we're looking for longs. So let's see what supply levels we've got. Kind of a red candle here before this first impulsive move to the upside. We have a red candle here, but this one's already been tapped. So again, he doesn't trade. He only likes to trade untapped supply and demand levels, so I wouldn't use this one. And then I guess the only other one that we could potentially be interested is this last one down here. But I think this is probably the best one for us because it's above the moving average. So let's see if we get tapped into this supply level down here. I guess before I get too far ahead of myself, I might have just missed this one. So this then will last. It's a pretty broad demand zone. Pretty broad demand zone. So what do you think for a second if I would have wanted to take this one? So we got a wick into it. It's really not the best risk to reward, so I probably wouldn't personally take this one. Just because you really have to, like, you're going to have to come back here and assume that you fill like all of these previous fair value gaps to give yourself 3R. It could work out, but I think I would prefer if we came back to this one personally. I don't know. Do you guys, should we take it or not? I'll do whatever the people say. Alright, nobody's confident enough in chat. We're passing on it. So I'm not going to take this one. It might have played out. It actually would have just barely stopped us out. So that's a good one not to take. So let's see if we can get a tag into that lower level. That's a lot more interesting. So we did basically run entirely through that level. So definitely no trades off really either of these yet. But we have this lower one that we got a nice wick off of. Let's try a long off this. So this level down here, we got a really nice wick into it. So we'll do a buy stop with the candle close above here. And for backtesting, I'm using these buy stops, but when he actually trades this in real time, he'll literally just watch it and like enter when it gets above the candle. So you could either do that, or if you have time to kind of set up the buy stop with everything, that might be better. So if we fill this fair value gap, it's only 2.21R. So I think I'm going to go for just this high, I guess, to at least give us 3R. It might stop a little early, but I want to try and be consistent, at least try and go for at least 3R with these trades, just to make the backtest somewhat consistent. We'll break even after one, and we're doing a buy stop. Let's see how this one plays out. I think it should have recorded a loss. Did it not tag us in? So I think this one might have been so fast that it didn't record. So let me try and record this one real quick. So come back here. We have our trade. I guess like it was essentially a market order because the candle closed pretty much at the high. So I'll just do a market order to make this one simpler. Place order. I know it's going to be a loss, but I just want to record it so we have it for the data. So I'm just doing a market for this one, just so it's simpler. And it was pretty much an instant loss in this case. Potentially one of the things you could look at is like how directly does the price come into a level, because this is a pretty impulsive move to the downside now with a break of structure. I think in general it would be better if, maybe we were kind of working our way down there and then tag in, because there's not as much momentum, I guess, coming into a level. So that could also be something that you could make note of, and maybe that's an invalidation for the model if you're seeing like, and technically this one did also, I'd mentioned to you guys, this level was now below the moving average, so maybe this was, not the most high probability setup because we were no longer in line with the moving average. That's kind of another consideration for this one. But recorded it anyways because it was a valid level and we did see a nice initial wick reaction. But that's probably it for this day. There's not really any other levels unless now we are flipping bearish and we could potentially look for a short off this new supply level. So this last green candle that took us out initially has now formed a supply level, and yeah, we still never took these relative equal lows for before, so it could still be a draw on liquidity to the downside. This is again where I think these moving averages are kind of helpful because you can, instead of being like all day like trying to long this thing, you can be flexible and see, okay, now we have shifted to the downside, and with this model we can now look for shorts. So let's see if we get a wick into this supply. Nope, closed into it. So yeah, I guess there was a low time frame draw on liquidity here, that was kind of, I guess, enough fuel for a reversal, but no trade for a short here because it closed into it and pretty strongly actually, like at the top of this candle. And now that we're flopping back and forth, I think this kind of shows that this is kind of just a ranging environment right now, kind of just chopping up and down. So I'm honestly just going to go to the next day, and we'll do maybe 1 or 2 more days and then take a look at the analytics and answer any questions. So we're back in an uptrend, and we have shifted market structure to the upside with nice impulsive moves. So a couple demand levels I'm seeing here, one right here and one right here. So again, he'll use the last kind of red candle but draw it all the way out to the low. So this entire zone he would kind of use for the demand levels. So let's see if we get a reaction off either of these, or maybe not. Maybe it just continues to the upside. So now we have a higher demand zone from kind of this last red candle before this impulsive move. So we got a few levels here we could potentially look for a reaction. We closed into it, so again, I got to pass on it. It might have worked out. But trying to stick to the high probability setups, and since that one closed into it, I passed on that level. So let's see if we get something a little bit lower. Might have just gotten front run. Alright, we're pretty much at the end of London session this day. I think there's maybe like an hour left or something, but let's go ahead and give this one a shot. So we got a wick into, and make sure this is at the right level. So we have a wick into this lower level, pretty much in line with the moving average. So let's go ahead and give this one a shot for a long. So we'll do a buy stop at this high, stop at the low that wicked into this demand. And for our take profits, maybe I'll go for this high. That gives us at least 3R. So let's see if we can catch one last trade before we review the analytics. So I'm going to go back to a buy stop, break even after 1R, and let's see how this one plays out. So we did have a closure now. So high no longer like the highest probability setup, but let's maybe play this one how he would if he was taking like the lower probability setups as well. So he would basically now, instead of entering off the high of this previous candle, he would kind of follow, and now I'm going to enter if this latest candle, if we get a closure above that, but also the stop loss needs to drop. And since we have better risk to reward, maybe we can just kind of target these equal highs here for 3.26. So buy stop 1R, we will go break even, and let's see if this one plays out. So we got tagged in, we're already break even, and we're probably gonna get tagged out break even. Nope, not yet. All right, let's see how this one plays out. Nice. So again, this is it's not the perfect high probability setup, but I do think this is one that you would probably take pretty often because it didn't it didn't dig in like super deep. Maybe a rule you could have is maybe no closures beyond the midpoint of the zone, and like a really good tool for that are these parallel channels. They have the midpoints on here. If you come in here to the settings, you can kind of show the midpoint of these. So if you need a zone with a midpoint, the parallel channels are a really good tool for that. So maybe that's rule, but I went ahead and recorded it because I think he would have likely taken this trade and ended up being a nice win. Almost tagged us out break even, but not quite. So let's take a look at the analytics. We back tested what from April, basically like half a month essentially. We took 9 trades. 4 of them ended up being break even, and the ones that either ran to win or loss was 60%. We averaged 3.65 R, and yeah, I mean we're up 8.9 R in not even a full month. So I would say this is at least a decent strategy. I think the conditions that I back tested were probably pretty good for this strategy. He said like trending environments are generally when the strategies do pretty well, and I think obviously we saw with the back test like it was in a pretty clear uptrend, so we were mostly taking longs. I think we only took like 1 short, so we were generally just kind of following the trend, which is higher probability environment to begin with. But yeah, I would say this is a decent strategy to look at. He'll back test it, or sorry, he'll trade the Nasdaq, the S&P, the Euro, GJ. I think he's starting to do a little more futures with some of his more recent videos, but he predominantly trades this strategy during New York session. But again, we just back tested this pair during London, and it seems like could be a viable one as well. So yeah, I'll hang around for a couple more minutes. Do you guys have any questions about the model that I went over? Were there any specific examples that you didn't fully understand? Let me know if you guys have any kind of questions in the chats. Otherwise, we'll wrap it up in a little bit. And then yeah, same thing. If you guys have other strategies that you want to see requested in the events channel, we've got a link to a feedback form. You guys feel free to give me any strategies that you guys want me to take a look at, because I kind of enjoy digging into these new strategies. This is one that I'd never seen before, but it definitely seems like an interesting strategy you guys can check out. So not seeing any questions, so we'll go ahead and wrap it up. But thanks for joining today, guys, and I'll catch you later.